Hello everybody, Justin here. I hope you guys are doing well, having a great day or a great night. And let's jump into the charts. Just a second. Okay, let's go. So before looking our last action for yesterday, let's take a quick look in the past to understand what's happening today. So let's jump into 73. Let's measure. Okay, so the move we were looking for, let me take another zoom. Okay, better. Okay, so here, no news. We didn't have the trigger on the golden, and we end up rejected on the 5th. And also another red flag here back in the day, tombstone doji. That means it's a big red flag for the bulls, and a call for the bears. And then we end up with okay, 48%, not so bad, but close to down theory. Now let's take a look on 2000. Okay, so let's take a look at this scenario here. Just a second, please. Okay, let's go. So for this one here, let's see. Okay, so no news here. We had a healthy retrace to the golden, which is a bull market characteristic. So no news here. Let's go, 2000. Here we are. Okay, so this one here is a bit tricky. Let's zoom. Okay, so what we know about external forces for this event here, in 2000, if I'm not wrong, in June, we had, before June, our Solaris Apex, and right after we enter in the minimum Solaris period, okay? So very significant info. Okay, so this is our beginning of minimum Solaris. Let's put it here. Okay, and here we didn't had a clear dead cat bounce, but we had a lot of bearish structures. So it wasn't all the way bad compared to the other indexes. Okay, so we made it to the 50. And here again to the 50, shooting star. Okay, here we had a more aggressive move from the bulls. We made it to the golden multiple times. 1, 2, 3, 4. And also another thing, we had a mirror here. Another one. This one as well. Doubt, neutral candle. And then here, let's take a closer look. Yes, then for the first time after the beginning of 2000, sorry, Q2, and so here our trigger for the bulls, we so let's start from the bottom. So here we had One, two, three, four, five. Okay, so five occurrences, and all end up with big rejection. So a show of strength from the bulls, very significant as well. And the key element here was the bulls made it for the first time since Q2 above the 50. So this was our the trigger, okay? Because we don't have a clear move in this scenario right here, like we have for Dow Jones and index, okay? Okay, and here 2008, okay, bearish hammer below key resistance and expansion level as well, 1597, no confluence, which give us this all this time here was it's like this. Let me if we made it above, we would have a trigger. Okay, so the move we could expect from the trigger would be a more aggressive move. Okay, so it would happen way before the one we had in 2013. Okay, so let's take measure here. And again, rejected on the golden. Bearish reversal candle below 50. That's the key trigger for the bears. And then we end up with, okay, this was a huge drop. Okay, 57%, which is also close to down theory. And now let's jump into today. Okay, so for this guy here, let's take a look on the weekly because it's clear. Okay, so what we have here now, okay, so we made it to the above the golden, right? First the 50 take out, and then the golden, the bears showed up, but they got insta wrecked. We know the reasons: infinite QE, Ripple, Ripple scan or whatever, etc. And so let's go. So the level we are looking here for the bears, it's between, let's take a look. Just a second. Okay, here it is. So those, okay, so these levels are the next levels we are looking for. And in here we have this power candle, the bullish power candle, and which is somewhat a problem because the bears, I don't believe they will try this level here again, okay, because we know we have a trigger here, and so the level we will be watching for is 3091 and 3237. Okay, so that's the levels we will have in mind for now. And another thing about this scenario, we just had this huge drop. Okay, we didn't had a health correction at all for a long time. We can see here. So let's measure. Okay, so 20%, it's not enough for this kind of bull market that we are having. And so we end up with this one here, 35, but it's also not enough because otherwise, if the stocks keep printing new highs all over, everybody can quit the job. and put everything in stocks because everyone will be a millionaire. So that's not how it works. We know the market will punish. We know only 8% are profitable. So I strongly believe we are going to see a 50% correction from the all-time high. Yes, I can be wrong. I don't care. But what I'm looking for, it's historical occurrences. We have triggers, historically triggers for Dow Jones, Nasdaq, SPX, and many others as well. But you know, I like to follow patterns and historical events, occurrences, triggers. That's the things I'm looking for. So the charts, it's my newspaper. Okay, that's the only thing I care about. So now let's take a closer look. Okay, so here there is another key level here. Let's take a look before jumping to the 3 days. Let's see how we are doing here. Okay, on the 50, we made it above. Okay, we closed the gap. And now let's take a closer look on the 3 days for more info. Okay, so here we have we closed the gap, but we are this move right here, it's not healthy for the bulls for a fact, and it also have a bearish nature, which means if we keep going like this, we will end up in a bear break. Okay, so this is it's a fact. And another thing that we have here, so this move here and the impulsive bull break was all the way bullish. Okay, so no news about it. But also again about this one here, this structure is a broken mirror. Sorry, it's not a broken mirror, but it's only a mirror, because this move here, he has confluence with the sell move. Okay, which means if we keep going like this, price will follow the ones in control for now. So that's what we will end up in bearish continuation. Despite the Fed Ripple and the Infinity QE, in my opinion, in my humble opinion, they are preparing the markets and the society as well for what is to come, what is next. Okay, I don't believe this is it. This is not the kind of candles for $1 trillion. Okay, so let's jump into the daily. Okay, so here, just like the Dow Jones, if I'm not wrong, we had this broken rising wedge. That was the first red flag. That it's like a camouflage. It starts to turn bad, they go in and change. It's like a premature bear break. So it's not a call for the bears, not yet. It's like a delay, camouflage. And here, right after, we had this impulsive move. If we take this one here for a single structure, it's somewhat ascending channel, a parabolic one, and right after we are having another one. Okay, so not a big deal on those three guys together, but what we can see, it's we are starting to bend. I don't know if you guys can see how we are struggling to keep going higher. This is exhaustion, loss of momentum. Okay, and then let's take a closer look. So here, this scenario, let me draw a line here. So this was a potential scenario for Head and Shoulders. but I made this higher low compared to this one, which invalidated the whole structure, but it's still bearish in my opinion. I'm going to show you closer on the 4 hours. Okay, so we had this guy here, and then this impulsive move here as well, which all the two are mirrored moves, okay, following the trend, the trend in a short time frame, because we know so far the bears is still in control until we make a higher high. So for now the bears are in control. And here another one, another impulsive move, but with not the same strength. Can you guys see? And then we start to go more sideways, like it's bending. So that's another red flag that we will have to watch out. And let's take a look on the closer, shorter time frame, 2 hours. Okay, let's draw some lines here. If we take this scenario here for a bearish continuation structure, inside these structures we have this corrective wave, another corrective wave, and then this bearish impulsive wave. Okay, I mentioned about this guy, this structure here in the last video on index, if I'm not wrong, also for Dow Jones Industrial. This is it's like a 50 scenario for bullish continuation, because it can also end in a bear break. Okay, I'm going to show you here. So this scenario right here was bearish, okay, and we would end up like this. And like I said before, every time we end up with a bearish structure, they change it. It's like just like camouflage. It's like trying to hide an imminent event. So postponing, you know. And then here, right now we are above the 50. I'm sure. Let's take a look. So for this, just another thing here, just a second. Okay, let me find the 50 here. Okay. So the thing here for now is this. In my opinion, if we close below, we may look for another high compared to this one, which will give more bearish odds for the bears, and it will be even more bearish, okay, a scenario like this. And so far we also know that this structure here, despite the bull break, this kind of move is not bullish at all, okay, because we are agreeing with this move here. Okay, so for the mirror trend, it's like this: bear market, okay, so bear market, bear flag. If we draw a Fibonacci here, we will always end up on the 50 or on the 61. Okay, so that's the range for the bear. Sometimes it's also true that we can make to 780, okay, but that's the range for the bears. And so what follows? This move right here agrees with the ones in control. Okay, so it's a different way to look at price behavior. That's the theory I'm working on to make things clear and easier to understand, okay? So in the same example for the a bull market, if we draw the Fibonacci here, we end up on this one is a little aggressive, but this here would be the golden 61, and also can be the 50 as well. This is the common behavior for bull market and the same for the bear market, okay? So this is the mirror trend, and let's take a closer look here to see what we have. Yes, we are still grinding, not bullish at all in my opinion. Let's take a closer look on the 30 minutes. Okay, so a key level here to watch. Just a second, please. Okay, let's go. So key levels to watch here for now. And also this guy here, that's our gap. Okay, so if we made it, we can make it above the gap. We may look for the top of this bearish channel, okay, bearish structure. But so far all we have, it's a lower high. We know this whole move here is not over yet, so Monday will be very interesting, and in my humble opinion we are very close to the end of this structure here, and also in the bigger picture. And let's wait and watch to see if we can place our shorts safely with more info and in a better scenario, okay? Remember, this is not financial advice, this is for educational purpose only, okay? And I am also sharing my research about all the things that I am working in technical analysis. Quick look on 15. Okay, bearish spinning top, indecision candle, kissing the R50. So not a big deal for now. We closed all the gaps. Okay, so that's our last bastion here, and let's see how we will behave on the Monday. Okay, so I believe this is it for now, guys. I hope you guys enjoyed. If you have any question, you can ask me on Twitter or here as well. Leave me a message if you need to ask something. And well, that's it. I hope you guys have a great day. Enjoy your time, your weekend, your family, your friends, and I will be back soon for another live stream. I believe in a few minutes. Okay. Let me take a look on the chat. Okay, do you think we will open down this weekend? You mean after the weekend, Aaron? I don't think so. I believe we may open with another green activity here, but it's so far it's no man's land. Okay, shorts or longs for now. It's not clear. We are not trading. Okay, so we will wait a bit more, just a little bit, and then we will make take our decision for this bigger picture here, because things are really shade, not looking great at all, and we will be looking for our short soon. Okay, so guys, this is it. Thank you for now. Thanks for your time, your patience. Stay safe. I will see you guys soon. Thank you. See ya.